Hi again, it's Jared with LearnToWinTrading.com. I wanted to do a little bit of a different video tonight, talking about a subject that I think is very important for people who want to learn how to trade, and that's about learning how to make probabilities work for you. I don't know if you've ever read the book Trading in the Zone by Mark Douglas. I think it should be a mandatory book to read when you're learning to trade. It's just so good, talking about a lot of the psychological aspect of trading, not so much the technique. The techniques, at least with the KISS system, are very simple to learn. But the hard part to master is being able to train your mind to think objectively, to analyze the market objectively, and not to let fear and greed run your emotions and cloud your judgment. It's a very easy thing to do because when you trade with live money, with real money, a lot of emotion is attached to that, and so it can be difficult sometimes, and you can find your mind getting clouded with clouding your judgment, or the emotions taking over, clouding your judgment, which affects your trading. So let me give you an analogy that's brought out in the book by Mark Douglas, Trading in the Zone. I like to call it the analogy of the casino. What he talks about is probabilities. When you think of gambling, gambling is a game based on completely random results. One hand should be completely random from the next hand. Just like in trading, each trade is independent in itself and completely random. Basically, there are so many variables playing an effect on the price at one given time that it really is impossible to determine which way it's going to go. But the casinos understand probabilities in a way that a lot of people don't. And this is how. The rules of the game, let's say blackjack, actually give the casino an edge up in the game. For the casino, the rules give them a 4.5-cent edge on every dollar that crosses the table. So what that means is that the casino, the house, they aren't really concerned which hands they win and which hands they lose, because they know in the long run they're always going to come out on top. Let's say in 1 year, $100 million were wagered on all the blackjack tables in a casino. If that were the case, and with the rules of the game, that casino should net $4.5 million in the year. And that's a given because of the rules of the game. It's just built in. They don't really worry about all the big losses they might take to the house and the big wins they might take. When it's all said and done, they make money. That's why casinos are so profitable. Same thing can happen with trading. Let me show you what I did this morning, and maybe I can kind of illustrate it. Okay, the market opened right here, and the first trade I saw, my first signal, actually was right here, and I took a loss. Now, this was, I felt, a good signal, but just like in gambling, some hands are just not going to go your way. I entered this trade going short right around here at a point. What I was reading is I felt like it was going to be a downtrend and continue after this little support line here. I thought it was going to keep on breaking and going down. Well, I was wrong, and I lost that hand. I didn't lose bad at all. I only lost a tick, which is 0.25 points. That's really not bad at all. I saw it coming and I got out, so I cut my loss short. The next trade I took, and I made 3 trades today. Next trade I took was right here. This one was a winning trade for me. However, I didn't win as much as I would have liked to win on this trade. What happened is I entered right here going long, and I rode the trade up 1.5 points. At this point, I have a 2-point profit target, and I was moving my stop loss up so that I could at least capture some profit. But what I was looking at is that it was hitting a resistance line right here, and I felt like it was going to move back on me, and then maybe once it broke that resistance, it would keep going. So I was playing it a little bit loose, meaning I wasn't moving my stop loss up as high as I normally do, expecting it to drop back a bit. Well, it did drop back on this candle and actually ended up reversing on me. So I kind of expect this one was I was a little bit wrong on this one, but I got sucked out and I was positive 1 tick on this. So basically for the day I had broken even. but I do count this as a winning trade because obviously it ran 1.5 points my way and I was still positive on it. Next hand I won was right here. I won, gosh, I went short on this trade about this point, and it ran over 2 points, which would have hit my profit target. Now, this is the thing, and this is just the way I trade. I have a 2-point profit target, but I become more and more conservative the more trades I make through the day. I generally don't like to make more than 3, but at this point, when I was in this trade, it had run 1.5 points, and because of, I guess, maybe a little bit thinking about how this went and how this one went, well, I was in my third trade, and rather than risk playing it loose so that it could hit my profit target and make my 2 points for the day, I actually tried to get out 1.5 points so that at least knew that I was coming out profitable today. Well, it fluctuated back on me, and I only got a point out of it, but that's not bad. I had broken even with both of these 2 trades. My third trade, I made my money. So actually, I was 2 wins for 3 trades, so 1 loss, which was a 60. I guess if you want to analyze it this way, it was 66% winning average, which is okay, but you want to really take an average over a longer period of time. So let me show you how this broke down today. I got my 1 loss, my 1 win back, and there we go, 1 point, for a total of a 1-point win, or 10% on the money. Now, this is a pretty good day. I wish it didn't take me 3 trades to make 10%, because I generally do a little better than that. But this kind of demonstrates the point I'm trying to make. The probabilities are, I should say, KISS system signals have a built-in edge in them, because over a large enough sample size, over a large enough number of trades, you end up winning more than you lose. Just like today, I made 3 trades. I won 2 of the 3. Now, no strategy is perfect, so you're going to take losses. That's just the nature of the game. But if you can be consistent in the strategy, the probabilities are going to have you come out on top. I hope you found this interesting. I think it is anyway. And so that's all I've got for tonight. Until then, have a wonderful day.